Welcome to the #InvestThis podcast, where the secrets for real estate investing are revealed. Now, here's your host, Scott Bauer.
Welcome, everybody. This is your host, Scott Bauer, and this is the 17th episode of the #InvestThis podcast. Today, we have Andrew Campbell on with us with Wildhorn Cap. Andrew is a native Austinite and real estate entrepreneur who broke into real estate investing first as a passive investor in 2009. But in 2012, he transitioned into active investing and management of a personal portfolio that grew up to 76 units across Austin and San Antonio, Texas. He earned his stripes building and managing his personal portfolio before moving into the larger multifamily buildings. At Wildhorn, he is focused on acquisitions and maintaining the investor relations, leveraging his marketing background to build long-term relationships. And today they control over $70 million in their portfolio of over 700 units. So with that being said, Andrew, thank you for being here. How are you doing today?
I'm doing great, Scott. Appreciate you having me on. Looking forward to talking with you. Absolutely.
Why don't you give the listeners a little bit more about your background and kind of what you're focused on now?
Yeah, absolutely. Like you kind of covered there, I grew up in Austin, got into real estate, kind of 2008, 2009. I was living out of state. I moved back home due to my dad getting sick and was kind of looking at, reevaluating some priorities in life and was looking for ways to create passive income. So kind of jumped into buying rental properties and invested in some real estate. Some dumb luck involved just in buying in Austin at exactly the right time. But, bought a duplex, and a fourplex, and then another fourplex, and we scaled it up. And along the way, saw the power of the business model, fell in love with the business, and realized that this was the path that was going to allow us to live sort of an intentional life by design, work for ourselves and create a lot of those passive income streams. So we've been jumped into that larger space, of syndicating deals and kind of focused on 150 plus unit deals here, Central Texas and in Atlanta.
Okay. So what about before that? I mean, before you got into even buying duplexes and, what were you doing before that? How did you make that transition just into real estate at all?
Sure. So I've got an advertising degree from University of Texas. I was, lived out of state, lived in California and Minneapolis, worked for ad agencies. And really the pivotal moment was, when my dad got sick and when I got a phone call, said, "Hey, your dad's got a brain hemorrhage. She's in the hospital. You need to fly home."
That's scary.
We don't think he's going to make it. I jumped on a plane. I was 27 years old. It basically ended up never leaving. Stayed here, kind of helped rehab him back to health, and had a lot of time in that sort of 6-month period. I ended up having to quit my job and stuff as I transitioned home to, just kind of reevaluate some priorities and think about what did I want out of life. I looked at he was 57 years old and had been a good, entrepreneur and started a couple companies, tech related stuff, but had been kind of a corporate guy. And I was like, well, I don't necessarily know I want that. I mean, by most standards, he achieved success, had exited a company and it did really well. But I was like, this is kind of, he didn't love his job, which is one of the things that propelled me into advertising at the beginning. Was like, well, I want to do something that I like. He hated his job. But kind of going through all that, I had a friend who was a realtor, had a couple duplexes. During that sort of, reflection period of 6 months, he gave me Gary Keller's Millionaire Real Estate Investor book.
Yep.
In about that time, I got Rich Dad, Poor Dad, and just sort of opened my eyes to what I could go do, what's possible, just a different way to look at the world. And, it took me, I did some passive investing, kind of funded a few, infill development projects here, kind of got it going a little bit, and then jumped in and it's really never turned back.
So, I mean, that was, you said 2009. So that's, we're 9 years ago, right? So it's taken you 9 years to get where you're at now with 700 units. Was there a pivotal spot where you really jumped from, a couple units to catapulting to the next level, or has it been slow and steady ever in that 9 year period?
The first, I'd say 7 years were pretty slow and steady. We were doing it all with our own capital. I'd buy a duplex and then, we'd save up cash flow and get a bonus from our job, would buy a fourplex, pulled out some equity. So we were learning the business. And at the time I thought that was the plan, right? Continue to work, but that was decreasing the amount of time I was going to have to work. I'd be able to retire at, 50 rather than 60 or whatever.
Yeah.
And it just was like, hey, I felt pretty good about things. We had 75 units and got to that point. And then I think I just realized that there was a lot more out there. And I number one, fell in love with the business. I saw the business model working. It was like, we're buying these sort of working force class B class properties. We're fixed a little bit. They're appreciating. The rents are going up. The cash flow is great. How can I get more of this? And we're sort of, I can't scale this up as fast just with my own capital.
Mm-hmm.
And also saw that properties, our bigger stuff was outperforming, so our little 10 unit was better than our fourplexes, which was better than the duplexes, which was better than the single family. So you start doing the math and you do some reading. You said scale it up. So really, we're at 700 units, by the time this comes out, we will be, and it's 600 of that has really been in the last year. So,
Okay.
2 years ago, got really intentional about scaling up and doing the kind of the bigger projects and partnering with investors.
So from a mental standpoint, it's never the how-to, right? It's not, if somebody tells you how to go do this, some people will do it, other people won't, but it's more the mental, right? It's getting out of your own head and making sure that, it sounds like your why was, you found out that the cash flow is better, that you're getting a better return on these larger units. And the only way that you're going to be able to go to those larger units is if you partnered with other people to syndicate these deals, because you weren't able to do it with your own cash. Right. I mean, and so that mental hurdle of, what made that transition, or how did you start to think, if you can pinpoint what that is, how did you start to think on a bigger scale?
I think because we had seen the model play out and knew it could be successful, we had managed everything ourselves, and we spent that 5 or 6 years building out, sort of basically kind of proving to ourselves what the model was and that it could work.
Yep.
There was confidence that I knew it would be successful. Then the mental hurdle was the responsibility and the ownership of taking money from partners, raising money. That's a huge responsibility, and that I think was the biggest hurdle of, how's it going to work, and am I sure it's going to work once I start taking money from, start out friends and family and, people that are real close to you. You don't want to lose your dad's money.
Yeah, that's true. That's very, very true. So, yeah, I mean, that's exciting. Is there a specific, would you want to invest outside of Texas? I mean, have you thought about doing that, or is it, kind of, and that'll bring me actually to my next question.
Yeah, we are actively looking for deals in Atlanta as well.
Right.
So my brother lives there, and that's a big part of the reason we wanted to kind of get outside of Texas, offer investors some geographic diversity, spread that risk out, but also continue to kind of play in the southern markets where we feel like there's population, job growth. Our focus is a little bit more of the stable big markets. We're not chasing kind of tertiary markets where I think a lot of people are going looking for yield and cash flow. Like we're still sort of a mid to long term investment group.
Was that what, 5 years plus, or what is it?
Yeah.
Yeah.
Yeah. We're kind of looking, 5 to 7 year horizon, saying, in that time horizon, if we're in Austin or San Antonio or Atlanta, those cities aren't going anywhere. People are going to continue to move to them, and these projects are going to do very well in that span.
Definitely. I'm here in Phoenix, in the Phoenix market, which is a very hot market when it comes to the multifamily in general. I mean, we're dealing with, on the larger 150 units plus, we're dealing with institutional buyers that are happy with getting a 4 cap, right? They're beating the banks. They're doing that as their benefit. And for the younger or the smaller guy, we just can't operate on that same type of criteria. So, give me an idea of what you're seeing in Texas or in Atlanta from a cap rate standpoint, or what it is that you're targeting.
Yeah. And I think we see the same that you're describing, and really, anywhere that's in, the sort of the smile of the US, starting Vegas, Phoenix, certainly we looked at Phoenix a lot when we were kind of evaluating, outside of Texas, where to go, like Phoenix. But I think it's equally competitive. You're seeing a lot of institutional players, a lot of competition for deals. We're seeing cap rates, 5 to 6, sort of on in-place numbers. Depending how you want to adjust for taxes, they probably go lower than that. And, for me, as kind of leveraging my marketing background, it's like, what's the story of the property? I think that's always what I'm focused on as we see deals. Why is this seller selling? What are the value add opportunities? What have they already done to the property? How long have they had it, et cetera? really focused on finding that the story there and the story that we can go create, when we buy it and execute our strategies.
Sure. So and that kind of brings me backing up to '09. I mean, you're saying that the majority of your units really happened in the last year or so. So the market is now up, right? When you started '09, '11, that time period, things were very down. So you could find, I mean, if I knew what I knew now or know now, I would be in a whole different spot because I would have bought as much as I could back then, right? But now we're not in that time period. We're not in that market cycle. We're not in that place. So speak to us a little bit about what you think is going on in the market and how you're protecting yourself against that, any changes that you may be or may not see coming.
Sure. Well, I think certainly you got to be aware and cognizant of there's going to be a shift, at least a slowdown, right? If not some sort of correction. I think some of that comes back to the time horizon we're looking at, and we are putting all of our deals, we do, long-term debt on them. So we're doing a 10-year fixed rate loan on our acquisition, our 253 unit that closes next week. That gives us multiple outs. We're not expecting things to turn and for us to be able to sell this in 2 or 3 years, like it's been happening for the last, several years.
Yeah.
I think we just, you look at workforce housing and the apartment space, I fundamentally believe there's going to be a demand for that over the long haul. If you look at sort of the macroeconomic shift to, home ownership and attitudes towards home ownership, if you look at the multifamily default rate in 2008 of Freddie Mac was like 0.4%. Meanwhile, the single family default rate was over 4%. It's like it's a relatively stable, safe asset class. People are always going to choose to live with a roof over their head, as a joke I'm always using, that it's going to be in demand. So if you're buying, in good markets that are stable and growing and have population growth, we're not buying this brand new, super institutional stuff that's got, $3 a foot rent. I mean, it is the $50,000 a year wage earner professional that looking for a good place to live. And that's what we're going to, offer them.
Definitely. And I would, speak to that same thing. I think as the markets change, let's say we do have another correction and now all of a sudden people lose jobs again, people, are out of money and they actually lose their house again. That's going to force them into renting, which is going to put them into your units. Right. So, multifamily for as long as I've been investing in real estate has always been something that I've thought makes a lot of sense in a lot of different ways. And even in Phoenix, we're looking for opportunities now because it's kind of like having a baby, right? There's never the right time to have a baby. You just need to get in the game. Right. And so that's super exciting. So
when you see a lot of people that I think are waiting, right? They're like, I'm going to hoard my cash and wait for the next correction. It's like, well, I just philosophically, I don't know that I can't live my life like that. I can't wait for the next thing, because is that next year? Is that 10 years from now? If you sit on the sidelines for another 10 years, what opportunities have passed you by? That the stuff, real estate's always going to increase in value over a long enough time horizon. And, buying smartly, you got to take action.
Definitely.
You got to be smart about it, but you can't sit on the sidelines.
Yeah, that is definitely a way just to look at life, right? You have to take action. I spoke with somebody yesterday that actually is another apartment investor, and he also does assisted living on, older adult population homes, right? With an older population that's there. And he said, the number one regret of everybody is not going out and doing something in your life. You have a regret that you didn't take that extra action or you didn't go do something, right? So the major thing I think that's really important is exactly what you said, and that is to take action and go out and do it, right?
Yeah.
So thanks for sharing that. So what's next? You're at 700 units. What's the next 5 years look like?
Continue to build our platform, find deals that make sense. I think this is a business that will do forever. We've got a sort of goal of doing 1,000 units a year, or having the capability of doing 1,000 units a year if they make sense. So that's, 3 to 4 deals per year, being active in the markets that we're in, building quality relationships. My favorite thing about this business is being able to be intentional about, building great relationships and talking to investors and people you're partnering with, as well as the broker community, who we're getting our deals on and off market from. It's a ton of fun. I mean, it's conversations like you and I are having all day long, every day. And I get energized by that. I love it. So I think I'm going to continue to be doing this and looking for deals. I think it's maybe we put another market online in the next 5 years, but we have plans to continue to find deals that make sense and execute.
And how big is your operation? I mean, how many people is a general partnership scenario, or obviously I'm sure it is with a general and a limited partnership when you're syndicating deals, but how many people are on your general partnership?
Yeah. So, Wildhorn is basically myself. We've got my business partner, Reed, who he and I kind of split up duties, and I kind of do acquisitions and equity and investor relations, and he kind of does asset management and underwriting. My brother's involved. He's helps raise equity and is our kind of boots on the ground in Atlanta. And then, each deal kind of has a unique structure based on, who else we have on the general partner side from, balance sheet guarantors and other equity partners, things like that. But that's another thing I love about the business is, back to my sort of advertising days, just the creativity. Every deal is unique, and it's like, how do you want to structure it? Well, what's it take to get the deal done? Here's a great opportunity. Let's figure out how to slice this thing up and be able to execute.
Yeah. And just probably going through the motions of actually going through and executing that whole deal. That has to be fun.
Yeah, absolutely.
It's certainly a good time for me. So, I think that's a pretty good segue kind of into the end part of the call. I call it my lightning round type of a scenario. Yeah. So I'll ask you a series of questions and we'll go from there. You ready for it?
Let's do it.
All right. So what is your hashtag invest this tip to keep our listeners moving forward?
Well, I mean, I think we talked about it. It's take action. It's don't be afraid, like be diligent in evaluating opportunities, but continue to take action, further your investing career, further your life, and can't just sit on the sidelines and watch life pass you by.
Yep. Absolutely. Thanks for that. Do you have a favorite book that you've read and has had a major impact either on your life or your business or both?
I mean, we talked about it, really the kind of the two that got me started, and I'm sure you hear it all the time. Gary Keller's Millionaire Real Estate Investor, really, spent a lot of time in the hospital room reading that book, really changed my thinking. And then Rich Dad, Poor Dad, was kind of fuel to the fire. Really just, those were the first two that kind of, lit the torch, and then it's, been lit ever since.
So Rich Dad, Poor Dad, is that something that, I mean, that's a very common book, right?
Yeah.
Do you read it more? I mean, is it something where you keep reading it every day, or not every day, but pretty often to keep yourself?
I've read it, several times, when I read Cash Flow Quadrant, but I certainly go back. I don't know that I read it once a year, but I've read it multiple times.
Enough times to keep it flowing.
Yeah. Yeah.
And then I'm sure, I know that we have one of the same coaches, and I know that I'm sure you have influence from other people, but what is some of the best advice that you've ever been given, and who gave that to you?
Yeah, well, actually, one of the things that sort of the mottos that I try to live every day by, particularly, you probably can recognize this as a sort of entrepreneur working for yourself, is, progress is the goal. And, not getting overwhelmed, not beating yourself up. It's like, I didn't get all this stuff done today. You know what? But I got 10 things done. I got 2 things done. I made progress. Progress is the goal. And that's been really helpful in just making sure that I don't get too hard on yourself, but you're always kind of looking ahead and celebrating the wins. Like, you got stuff done today.
Definitely. For the longest time when I was starting my business and just completely overwhelming myself on a daily basis with more things than I could possibly get done, there was a time not too long ago when that realization really hit me that, listen, it's all about progress. If we're just making 1 inch a day, we're making progress. We're eventually going to get there. And really, for all entrepreneurs and investors out there alike, I'm sure there is no real destination. It's all in the process, right? And so that's huge. And I appreciate you sharing that. And I think a lot of the listeners will appreciate that as well. So thanks for that. How do you like to give back?
We've got a couple of things that we get involved with. Here locally, there's a children's hospital here that we spend some time with and donate resources to. We've got a couple of neighborhood oriented things. We've got a kind of a dad's club that's got a charitable component. We get together and deliver Christmas trees in the neighborhood. I think anything that kind of is local community oriented and has a sense of giving back to it is something that's important, and we enjoy doing.
Awesome. Yeah, I mean, I think anytime you can give your time, you can give resources. It's not always when I ask the question, a lot of people think they have to actually give something physical, right? But the one commodity that we all have a limited amount of is your time, right? And so just giving time to talk to other people about maybe your business, or talk about how they can give back, or other organizations might be part of, like you're talking about going around to your neighborhood and giving out Christmas trees or doing whatever that might be, is huge, right?
Yeah.
So
when it's fun, like in that specific example, we put Christmas trees all over the neighborhood. All the neighbors buy them, and then we donate all the profits to Make-A-Wish, and we fund a Make-A-Wish. And you get the story, like we make a decision. What do we want to fund? Here's 3 options. It feels great.
Yeah, that's awesome. Well, kind of to end that off, how can we get in touch with you? If people want to learn more about you or your business, or want to ask you questions, can they reach out to you somewhere?
Absolutely. I'm a self-professed kind of real estate junkie. I love talking about investing in apartments. Would love to chat with anybody that's interested. Our company name is Wildhorn Capital. The website is wildhorncap.com, and my email is just andrew@wildhorncap.com. Awesome.
We'll make sure to put that in the show notes, and all the listeners out there, if you have questions or whatever it might be, just reach out to Andrew and we'll kind of go from there. But with that being said, man, I really appreciate you being here today. And I guess we'll talk to you real soon.
Yeah, thanks a lot. I enjoyed it, and talk to you soon.
Okay, sounds good. Thanks.
Make sure to like, subscribe, and share this podcast to help us spread the word. Go ahead and reach out to Scott Bauer on all the social media outlets for suggestions on topics and guests for the show. And check out investthispodcast.com for more secrets and resources to achieve real success in real estate.